In this video, we'll discuss how and why the cryptocurrency sector just experienced one of its worst days ever. Before you watch this video, be sure to like it and follow our channel for future updates. Due to extreme market conditions, a well-known cryptocurrency site said that it was stopping all withdrawals, swaps, and transfers. The company's liquidity has previously been questioned. But by locking in more over $12 billion in the cryptocurrency investments, the company shocked the market. Despite being unrelated, well-known trading platform Binance likewise disclosed a suspension of the withdrawals. Later, the business explained that the interruption was just momentary and was caused by a technical problem that was fixed after roughly 3 hours. However, this was enough to send investors into a panic, causing many to sell their Bitcoin holdings and hunt for safer havens. After losing 15% of their value, Bitcoin values plummeted to an 18-month low. According to a report by CNBC, Ethereum suffered the worst losses, losing 17% of its value. The worst day in the history of the cryptocurrency market occurred when its market cap fell below $1 trillion. Less than a third of what it was at its high in November. Despite the fact that investment banks like Morgan Chase are supporting Bitcoin's recovery, concerns over another Federal Reserve rate hike could hurt cryptocurrencies even more. Few days have been this horrible for the business that has sprung up around digital currencies. Despite the fact that the first half of the 2022 has been brutal for the crypto, the market valuation of the cryptocurrencies fell below $1 trillion on Monday, from $3 trillion at its peak in November, as a result of trading platforms stopping withdrawals, businesses cutting employees, and scared investors selling off their holdings. Under $23,000, Bitcoin fell to an 18-month low. The second most valuable cryptocurrency, Ethereum, plunged 17% in the last day, while Bitcoin fell 15%. Due to macroeconomic headwinds and rising interest rates, investors are moving away from the riskiest assets, which is why there is a sell-off. But it goes beyond that. A basic skepticism of the cryptocurrencies and the system that supports them was evident in the behavior on Monday. An already severe drop began to resemble panic selling. Concern has been mounting for weeks that a liquidity shortage may be affecting Celsius, one of the more well-known crypto stacking and lending sites. Users of Celsius can receive up to 18.63% in return on their deposits. It's comparable to a product that a bank might sell, but without any regulatory protections. In the previous year, the price of Celsius's Cell token fell from almost $7 to roughly 33 cents. More recently, it has fallen more than 50%. The largest token holder is Celsius. The company's $26 billion in declined funds, meanwhile, has decreased by more than half since October. In an earlier statement, Celsius acknowledged that the $120 million hack of the decentralized banking network Badger DAO had cost company money, although it did not say how much. Due to extreme market conditions, all withdrawals, swaps, and transfers between the accounts have been halted, shocking the market early on Monday. Additionally, the platform stated that the action was taken to stabilize liquidity and operations in a memo sent to the Celsius community. According to the document, we're taking this move today to put Celsius in a better position to honor its withdrawal obligation over time. With its $12 billion in managed crypto assets effectively locked up, Celsius has caused doubts about the platform's viability. The announcement caused a stir in the cryptocurrency community and brought back memories for some of what transpired in May when a failed U.S. dollar-backed stablecoin project lost $60 billion in value and brought the entire industry with it. The price of the Coinbase's stock fell 11% on Monday, reaching its lowest level since the company went public in April 2021. On Monday, Binance also pressed the pause button. Withdrawals of the Bitcoin were stopped by the biggest cryptocurrency exchange in the world for more than 3 hours due to a stalled transaction producing a backlog. CEO Changpeng Zhao initially stated that the patch would only take a half hour, but afterwards changed his estimate to state that it will take a little bit longer than planned. Service was back online about 11:30 a.m. According to a tweet from Binance, a batch of BTC dollar transaction got stuck due to low TX fees, resulting in a backlog of the BTC network withdrawals. The exchange reported that deposits were unaffected in a series of the post-mortem tweets and clarified the issue was caused by planned maintenance. Zhao promised clients that every penny was SAFU. In order to safeguard users' holdings, Binance established the Secure Asset Fund for users in 2018. Zhao noted that users could still withdraw their Bitcoin on other networks like CEP20 during their withdrawal downtime. A startup supported by Peter Thiel, BlockFi, has joined a growing number of the cryptocurrency businesses that are reducing expenses by laying off employees. The corporation revealed on Monday that it will be cutting headcount by around 20% before the most recent layoffs. The company has grown from 150 people at the end of the 2020 to over 850. BlockFi CEO Zach Prince said in a tweet that the dramatic shift in the macroeconomic conditions had an unfavorable influence on the company's growth. For businesses in the sector, it is fast becoming a recurring theme. Just 7 months after signing a $700 million deal to acquire the naming rights to the arena that houses the NBA's Los Angeles Lakers, Crypto.com said late last week that it will be laying off 260 employees. Gemini announced earlier this month that it will be eliminating 10% of its personnel and expressed concern about the industry's contraction phase, often known as crypto winter. In the meanwhile, Coinbase has decided to cancel some job offers and extend its hiring pause for the foreseeable future. It's no secret that the cryptocurrency industry has suffered so far in 2022. Liquidations surpassed previous highs this week. Over $778 million has been liquidated in only the past day, according to CoinGlass. This could be a result of the sharp declines in two of the biggest cryptocurrencies, Bitcoin and Ethereum. The biggest drop this week is almost 11% for Bitcoin. While many cryptocurrencies experienced high in October and November 2021, many are currently experiencing new lows. BTC, which reached an all-time high for around $69,000 in November 2021, is currently selling at just over $22,000, down nearly 70%. A rise in the price of the Bitcoin may be imminent, one that would be almost as stunning as its year-to-date losses. Stocks and cryptocurrency have both taken a beating. The most popular equity indexes are experiencing their longest quarterly losing streaks since the height of the financial crisis in 2008 and 2009, signaling that stocks are in a bear market. For Bitcoin, the situation isn't much better. Another cryptocurrency that has decreased 15% this week is Ethereum. The price of the coin is at $1,222, according to the CoinMarketCap, which is the lowest it has been since December 2020. Similar to Bitcoin, Ethereum reached its peak in November 2021 at $4,891.70. The current price reflects a 75% decline in the value of the common currency. Of course, the entire market is impacted when two of the biggest cryptocurrencies see such severe losses. Avalanche, Polkadot, Solana, and Cardano are a few additional companies that have already suffered double-digit losses this week. Numerous blockchain technology companies are forced to fire personnel adding insult to injury. 18% of the full-time staff of the Coinbase, one of the biggest and most well-known cryptocurrency exchange platforms in the United States, had to be let go. It intends to let go of about 1,100 workers out of a team of about 5,000. The CEO of Coinbase, Brian Armstrong, thinks that although the business expanded swiftly during a bull market, it now needs to make sacrifices in order to survive the bear market. He stated, after a 10-plus year economic boom, it appears that we are facing a recession. Another crypto winter might occur and endure for a considerable amount of time if there is a recession. We always prepare for the worst so that we can run the business in any environment, despite the fact that it's difficult to foresee the economy or the markets. For the longer-term picks and shovels answer for the entire crypto market, including Bitcoin, Dogecoin, and all the others, we have located one organization that has positioned itself well. Even if you don't have an account with a company or have never heard of it before, you have undoubtedly utilized its technology in the last few days. It has spread to that extent. To get our unique analysis and learn more about this company's potential as a long-term investment, sign up for the Stock Advisor today. Get started right away with a special new member discount and find out more. In other cryptocurrency headlines, the severe market conditions forced Celsius Network, one of the biggest crypto lenders, to halt all the withdrawals and transfers. The company declared, "We are taking this move today to put Celsius in a stronger position to honor its withdrawal obligation over time." Although bear markets are a normal part of the life cycle of any significant financial economy, seeing such dramatic losses is unsettling. What are your thoughts on this video? Please share your thoughts in the section below. Do not forget to click the subscribe option if you want to hear from us again.